Well, welcome today for another FJchat. I'm talking with Simeon Burnett from Snowball Effect. And firstly, I think it would be appropriate, apart from welcoming you, to get you to sort of position it and tell us a little bit about Snowball Effect first.
Sure. So Snowball Effect, we're a marketplace for companies to raise capital. Young growing Kiwi companies to raise capital here in New Zealand.
So where do you see that fitting in the overall concept of something, okay, NZX, publicly listed, you know, your mate in the corner who's got a few bucks, where do you slide on that sort of continuum?
I think ultimately it's probably somewhere between the two. We've clearly seen that there's an opportunity in the New Zealand capital markets, particularly for companies that are going through that growth phase, so the sort of past angel capital raising into the growth or expansion phase. That is a challenge for companies to raise capital there. It's also a challenge for investors to find opportunities generally to invest in those kind of groups that are seeking capital.
So this is sort of beyond necessarily startup, proof of concept's been done, and it's really sort of now funding that sort of either marketing or penetration or development or that sort of area.
Yeah, that's right. And we have done offers that would, I guess, be classified as sort of angel stage. We've done that before, so it's not a clear line between where those different groups, all those different sectors of the capital raising market fit. But we'll look at an opportunity when it comes in. We'll make an assessment on whether we think we can help it in the first instance, and then what's the best capital raising strategy? Is it to go out to the public, utilise our equity crowdfunding licence, so anyone can invest in it, or is it for more strategic investors, people with experience in investing in these sorts of opportunities, writing larger cheques, possibly getting actively involved with the business.
So now having got the model up and going, tell us about what you've learned about the markets in New Zealand that maybe were different from what you initially thought when you did your first speech about what you're going to offer.
Sure. I think generally the market has probably developed faster than what we thought it would. This concept of equity crowdfunding, which is where we started, so the public offers, that got a lot of media, got a lot of attention, which was great.
And a few competitors.
I think there was sort of at one stage there about 8 or 9 licences out there in the market, but there's really just been sort of 3 or 4 players that have kind of come through and done a series of offers over the last 3 years. So that's where we started, and I guess have seen the market pick up to a point, but I guess what we've learned and what we anticipated before we did launch is that we'd need to evolve what we offered companies. Not every company wants to go and raise from the public. It's just simply not the best thing for that company, but others really want to, and there's some significant benefits for them in doing that.
Profile and some of the other
profile, marketing, certainly getting in people that they believe will be advocates for the business. And there's different ways that companies look at it. One would be an obvious example where you have, say, a recent example of ours would be like a Zephyr, a cider company, where they're out there in the market, people know about them, like the product, maybe they'd like to invest some capital as well. But there's also companies that we work with, and this is probably more in the private placement phase, where they want to utilise our licence to go out there and easily bring in whether it be customers or staff or something like that, where they want to get that loyalty and have them actually invested in the business, but may also want some good-sized cornerstone investors or something like that as well.
So in learning, and you probably had some first mover advantage a little in terms of coming to market in New Zealand fairly quickly, what and this is the perennial question, I guess, as an investor, have you figured what the appetite is, what works, what people will quickly invest in, what's a bit harder to get through, a bit harder to actually raise for?
Yeah, I think for us, certainly the earlier stage opportunities, pre-revenue, or maybe just 6 months of trading or something like that, unless it's got a really capable team that's probably done something before, that stuff can be pretty challenging to raise capital for. It's just a risk-return profile of it for a lot of our investors just don't work. So if something's a bit more established, as kind of as you said before, got past that proof of concept, the risk-return profile starts to make a bit of sense. So we'll see people that would maybe invest 20 grand in something that's pretty early stage. They might invest $500,000 in something that's got some real legs, but proven that it can go to market, work with customers, push sales, and obviously get traction over time.
So have you had your first go round where someone's into a second round of funding, or come back to tap to that market because the first has worked and now they're in the next stage?
We've seen it a number of times. The most common one would be rights issues. So that's where a company has raised capital from investors and it say wants to raise another $1 million. It will then go out to existing investors and say, hey, we've done this. We want to raise some more money. Would you be interested in putting some more in? So that's the most common one, which is good because it means that people are willing to back it again. The other ones that we've seen have been companies that have attracted other investors, whether it's been people that have approached them or funds that have decided to invest in it because it is a little bit further along than when we saw it and when the investors came through us to invest in it. So there's been a bit of a range of, secondary raises post working with us.
How do you engage with these companies in terms of, one is the obvious question about your qualification process, but the other one is the support you provide them. Guys, this is the sort of expectations people are going to have, you're going to need to do this, and they're going through, to I guess, ensure their success.
Yeah. I think the first thing we do is sit down with the company and have a bit of a chat to them about what they're wanting. We can't provide everything for them. We have obviously the opportunity for them to go to the public, but then also we've got sort of very wide and increasing base of private investors who want to look at some of these sorts of things. So we need to make an assessment of whether we can actually help them or not, and if we can't, ideally we'll point them in the direction of someone else who's better placed than us to do that. So that's the first thing, and then secondly it is figuring out which one of those two routes is going to make the most sense. Oftentimes companies will have a number of things to work on. It can be things just like their financial forecasts. The team, if they're going out to the public, we are looking for independent directors, non-execs, to represent the new incoming shareholders on the board. And a lot of times companies haven't really thought about that, particularly the earlier stage ones, but even some of the more mature ones, it's just they need to bulk up that part of, or that aspect of their business.
Which is an interesting point about, I guess, you being the facilitator of a number of things. Initially it's capital. In fact, probably before that it's advice, but then it's capital, but then potentially it's some other things where you can provide a range of services.
That's right. So I think, the last 6 months for us we've developed a couple of things. First one has been, I guess, an understanding and a realisation that a lot of companies are looking for those independent directors to come on. From an investor's point of view, it's also an attractive thing to see a quality independent on there. And we've seen that there's a gap in the market in terms of matching directors with companies. There's some formal routes that directors can go down, but ultimately I think it can be done a lot more efficiently than what it is at the moment. So that's where we've spotted an opportunity. We already have an investor profile, we call it in the market, so when people sign up they can go into the investor profile and tell us a bit about themselves, and within there they can say, hey look, I'm interested in being a director or an advisor, these are some of my skills, qualifications, background, so on and so forth, and then we can easily filter and search. So when a company comes along, let's say a food and beverage business, and says, hey look, I've got to sort of $2 or $3 million of revenue, but I really want to push on, and we've got a bit of traction starting in Australia, it'd be great to find someone who can help us there in some capacity. So we can go in and we can filter and see if we can find someone, give them a call and say, hey, we've got this company, would you be interested in having a chat?
So those filtering mechanisms which you initially had for finding the investors who might be interested in investing in certain areas,
that's right,
can now be expanded to their own expertise in terms of actually saying, actually, we'd like your own expertise rather than just your money to actually come and act as the director.
That's right, and it may be that all they are is that independent director, which can be pretty critical, but they also may like to get involved with the company and at some point, maybe further down the line, invest, and that's their way of sort of foot in the door, getting to understand the opportunity within that business, and for the company to get comfortable with who they are and how they can help.
So do you see, I mean, there's a lot of discussion around at the moment around the NZX, NZAX and the markets not really delivering in terms of some areas. So where do you see this maturing, I guess, for you guys in terms of moving up the pipeline or moving more broadly in the pipeline? What do you see as some of the future of it?
I think there's a number of areas, and we've just talked about some in terms of how we can, provide a service and ultimately a marketplace for some different sorts of things. Capital clearly being one of them, but capability, human resource, if you like, being another. I think, and it's well known that the secondary markets in New Zealand just haven't delivered what they were designed to deliver. We have a top 50 on the main board that trades pretty well, but beyond that, access to capital, certainly liquidity for those investors either wanting to buy in or sell down is challenging. So I think there's some interesting models out there that could challenge the way that operates, at least in its existing form. So I think next 12 months, we will seriously look at what we're doing in that space. We've already sort of on paper developed a prototype for how a secondary market could work that would be quite different from how they operate at the moment. So the supply and demand will be concentrated into windows, so a company would actually only trade maybe twice a year for 2 weeks or something like that.
Okay.
So you build up supply and demand.
You come to market, literally.
You come to market. So you open your window, if you like. So you become public, or maybe even just with existing investors. And then you have a process around buying and selling shares, and then when it closes again, and basically the company goes back to being private. So you have a trading report that supports the information or the price that investors are willing to trade at. So that needs to be teased out, but that's the principles of it. We spent a bit of time last year talking to different people in market about how that might work. It goes on informally and within some groups, that sort of trading process. So I think something like that could be interesting to explore further. And it doesn't have to be companies that raise capital for us. It's just companies that have got investors or shareholders that are keen to participate. And it just puts a process and a system around how that happens.
Exactly. I had someone describe to me at one point, you don't actually operate a franchise until you fire your first franchisee, then you stand for something.
Yeah.
So at what point have you been at a point where you have raised some funds for people, but you won't do any more because that hasn't quite worked or hasn't quite delivered on what they said they'll do?
Yeah, there certainly have been some occasions where we've said, hey look, we know you want some more capital, but you need to tidy up some of this stuff. And you need to go back and be clear about why you haven't delivered, what's actually happened to the business since you raised 18 months ago, whatever it might have been. And it's sort of a natural inclination to sort of move on to the future in terms of what company performance has been. But ultimately, sort of even stepping back from that, what we really like to see is companies communicating clearly relevant, useful information to shareholders. I don't think it's always about just hitting it out of the park every time, although obviously that would be fantastic, but it's just not a reality.
It's not.
And a lot of time investors are in these sorts of opportunities because clearly financial returns, so a lot of them are there for that, but being part of the ride, part of the journey, part of that story is compelling as well. And sort of getting real clarity on that and understanding what's going on. Ultimately, there could be ways that those investors could help and sort of work with that company.
Use that expertise as well as cash.
That's right.
Things everybody wants. So what's your view in terms of when you started this, you guys got going and there was a pipeline, etc. What's the state of the pipeline now?
This year's been really good for us. For whatever reason, we've skewed a lot more to private placement at the moment. But we want to maintain a healthy pipeline of companies going to the public, raising capital, but they need to be the right sorts of ones that we think can really utilise the public profile and are at a stage where they're not necessarily needing just a couple of people, one person in there that's really actively involved with the business, that as I say, they can really utilise that wider audience for raising capital.
There's a bit of a downside to the fact of being successful in the private market. You haven't got your own profile necessarily.
That's right.
In some of those public offers, which are a good balance of things to keep those things going, isn't it?
That's right. And there are obviously benefits for us in doing the public raises for that profile piece, and ultimately, we like to think because these companies that do the public raises are successful and get out there and talk about it, and investors make some money.
So if you've got a business and you're looking to raise capital and coming to you, what are the top 5 things that you really want them to be able to say before they come to you? What have they thought about?
Yeah, I think I give 3 things off the bat. There's always the people, product and market. So for us, getting our heads around, who is the team, what are the people behind this, and what are they wanting to do? The product, how developed is it? To our earlier discussion, is it pretty new? Is it just an idea, or is it actually something that's been taken to market and you've been up and running for 5 years and delivering X? And then the market itself, and is this for domestic growth, is it going offshore, combination of the two, and what is that market that you're in? Is it a market that's starting to stagnate? If it is, what's your plan for growth, or is it a market that's got some chisel to it? It's new, it's emerging, it's developing, and you're at the front end, or at least leading the charge on a lot of that sort of stuff, and you're the horse to back. So that's starting points. Then we're always interested in terms of how they've been funded previously, and just hear their story really, and then
see if it resonates somewhere that makes them.
See if it resonates, and ultimately see if we can help them. We want to be hopefully fast and efficient. There's plenty of stories of raising capital that aren't fast and aren't efficient, so we want to change that. But there is a bit of a process that a company needs to go through.
To get there.
Yeah.
Superb. Hey, thanks for your time. I'm really impressed. And for those interested in Snowball Effect, do have a look at snowballeffect.co.nz.
.co.nz, or feel free just to drop me an email, simeon@snowballeffect.co.nz. Give me a call.
Absolutely, you've got to get the plug. Nice.
That's right.
Thanks for your time.
No problem.